Good afternoon, folks. We're just going to do a quick 5 at 5 here. There's obviously been some new revenue guidance in the last 24 hours. We were live with Thesaurus earlier on today, but the questions continue to come in. And we also have a revised document for you that will hopefully help with the explanation as the guidance currently stands. So I'm not going to waste too much time. John, can you start with just bringing us through the document? Jonathan, I think if you can share that document on screen there now, if you could bring us through the revised document that is A, guidance for accountants, but B, we're going to create one that you can send to your clients also over the weekend. So that's a non-branded one that you can literally put your own branding on or send out. So
yeah. I suppose probably it's a good idea first of all to touch off the guidance that was issued this morning. Just on the FAQs, what was updated and what wasn't updated.
Can you hold that for a second then, JR, until John gives the update on the FAQs?
Yeah, so FAQ 1.8 just confirms that the subsidy is not tax deductible, obviously, which makes sense. If you get something paid in, you're not going to get deducted for it. I suppose the other question is it taxable if you get it? You know, you'll probably have to treat that as a normal grant that you might receive as anybody, you know, from, let's say, a state body. If you're towards costing, it's likely that it probably will be taxable in relation to that. I suppose the idea is you might have losses now anyway in relation to it. FAQ 1.9 is just confirming that non-statutory deductions from the net pay are not to be taken off the subsidy. So if you've like things, examples of credit union fees, union subscriptions, anything like that, they are not to be deducted when you're paying them out. The idea revenue said is that, you know, they want to get money into your hands, so don't take anything off the net pay that would otherwise be taken off the net pay usually. Just again, reminder, if you're trying to get the money back, make sure you update your refund bank account. You know, there's two areas. There's one for making payments, one for refunds to come into. So make sure that's done as well. Just to clarifying as well in FAQ 2.1 that there's no minimum amount the employer must pay as an additional amount. They're just clarifying the amount equal to the wage subsidy must be paid. FAQ 2.6 then is updated to make clear that the employees who are full-time are still eligible, just confirming, you know, further clarification that can happen. And it's just clarifying that an ineligible employee are processed as normal, you know, so they're not going through the J9. So like some people will be asking the question, well, if I have normal employees that aren't within the remit of it, can I still apply class J9 to that? Answer that question, you can't in those particular cases. FAQ 3.1 then clarifies that an eligible employee includes a temporary employee. So before that wasn't in there, so that's in there now. And that he's not an ineligible employee if the net wage is greater than 960 in relation to it. So it is a little bit confusing now in the way that they say you're an ineligible employee if you pay more than the net weekly wage. But on the other side, in FAQ 1.6, it actually says that you get a reduction in the subsidy. So there's two contradicting examples saying opposite things, which isn't helpful.
So John, just in terms of that exact point about one section says, well, if you top up more, that you reduce the subsidy. And the other one is saying if you top it up, they become an ineligible employee. So I know it's very confusing to have two different pieces of advice, but am I oversimplifying things by saying basically you need to pay people to the limit under the subsidy calculation is just, that's the way to go.
Under the limit, yeah.
So
to the limit, I suppose, will make sure, or just up to the net amount effectively.
Yeah, so really, if you're going to get any benefit out of this here, you need to top up to the upper limit, but not go beyond it.
No, and I suppose, and there's a discussion in relation to, well, look, if you pay someone 800 and you get a subsidy of 350, then the tax, the amount that goes into the gross amount is the difference between the 350 and the 800. You know, we had a session there with Thesaurus Bright Pay, and they were still getting the view from revenue that in that particular case, you don't regross it, you just put in the difference between the 350 and the 800 in relation to that as being the additional pay. So if you regross it, you're going to get a clawback in relation to it, and that was still the opinion they were getting from revenue. And obviously they've got a direct line into revenue as well. But then I am seeing contradicting, and I suppose the the Ross Technical, obviously this query's gone in. So I've seen queries gone into Ross Technical where they've got a response saying, yeah, you can gross up. And then another one where he's saying you can't gross up. So obviously the revenue staff and their training aren't, you know, they're not tying in at all in relation to this. But my view at the moment is still that you don't regross.
And just one thing before we go any further, folks, I didn't do this at the introduction. This video has been recorded at 5 o'clock on Friday, the 3rd of April. And the reason why we're saying that is exactly the point that John just made. There's actually different answers coming back from revenue. There's new guidance. John, you don't have a crystal ball. I don't have a crystal ball. But just before we went live here, you expressed the opinion that there's a possibility there's going to be more guidance and more clarification over the weekend based on the disjointed information you're seeing today. Would that be your opinion?
Yeah, absolutely. Like, and like you can see, there's 4 iterations of FAQs now, and we still haven't got to one, which really is a key question that people have been asking: is the regrossing supposed to happen? My opinion is it's not supposed to happen. But like, that's something that's simple that can be put in an example. And that's, you know, no more issues. And I suppose it's not helpful when Ross Technical are saying, you know, you do regross sometimes, and then other answers I've seen where they don't regross. So, you know, they're not talking to each other.
Okay, so John, there's a thought that struck me, and I haven't shared this with you, but the thought that struck me was, so obviously every day that passes here matters, okay? So people need to make decisions. But let's say if we look at weekly payrolls and if we look at monthly payrolls, have I totally misinterpreted, John, that if somebody's on a monthly payroll, the decision doesn't need to be made right now. It just needs to be made before the end of the month. So
yeah, they're in a good situation. The monthly payroll, it's like plenty of time. Because then by then the iterations will have come. By then it should all be settled down. As you're saying, yeah, it's the weekly ones that it has most impacts on. Which is probably they paid this week, probably yesterday, probably they paid already. So yeah, that's exactly true. I suppose just to go on, and FAQ 4.3, just in the footnotes and under that, it's now confirmed, because, you know, I know some payroll providers weren't necessarily including that. When you're calculating your average wage for January and February, it makes it clear that it's the salary, including the BIK and before pension deductions. Just clarified that question now as well in their guidance. It's also just clarified that FAQ 4.10, just reiterate, once you made a submission with a J9, it's important that you don't try to change it, because you know, it'll be deleted after you do that. And I've seen people that have come to us and saying that was deleted. FAQ 4.12 just confirms that you can pay up to the net wage amount, but you can also, and on top of this, you can pay any tax refunds. So, you know, there was questions before, well, look, is my net pay amount included tax refunds? They've said no, it doesn't. So you can pay up to your net pay in our example, you know, up to whatever the 800 and 350 examples. So the difference between the 450 and you'd have the refund on top of that. So 450 was 350 plus the refund in that particular example. Just section 7 is a new section. It's more, again, dealing with compliance, making sure it's making clear, look, that you have to be fair. You know, you have to making a claim which you knowing not it's not true. Well, then you're liable to be an offence there. And likewise, anyone that advises you knowingly that it's not true, they are also liable to offence. I suppose it's a standard. And then FAQ 7.3 just confirms that you need to have on your payroll what's it called, Gov C-19 wage sub as being the amount of the subsidy. If that's not there, then you're liable to a penalty. I think it's around €3,000, you know, in relation to that. So it's just some clarification there, but I don't think they've given the, you know, the main ones that people are looking for, which is a simple example, you know, to clarify that beyond doubt.
Yeah, you see, I think there, John, I kind of know how they feel, because we're doing it all week. We're kind of fighting for time. We're getting something out, and then we're getting feedback from the accountants that's not working. And I feel that Revenue have launched their guidance a little bit like Microsoft do software programs. They let the users debug it. But John, one of the questions I keep getting again and again and again, the employees who started, worst case scenario, 1st of April or Monday of this week, but even the employees that started on the 1st of March, surely the intention of this legislation is not to victimize those people who move jobs, that this is just a loophole. And some accountants are saying to me, okay, we understand the eligible weeks, that net pay calculation. And if they take March as a 4-week month, or even a 4.3-week month, or whatever it is, like, there's no clarification from revenue on this at all, and this still remains as a significant open.
Yeah, well, I suppose they're still open to the 350 in that particular case, going on to the pandemic unemployment scheme in that particular case, because they're in employment up at the 13th of March for those people.
But is my thinking wrong, John, that it just doesn't make sense? The whole sense of this legislation is to keep the economy moving, to save employees and to save business. It just feels like it's a mistake.
Yeah, but I suppose how can they write the legislation too? Like it was a quick legislation to write, I suppose, and that's the other side of the coin. Those are getting 350, which, you know, depending on what salary they're on, it might be what you would have been getting anyway.
Okay.
Start in March as well. Like, so it's not that they're left out altogether, those people. At least they have, you know, a hope in relation to it. That kind of the key points in relation to the changes that revenue made there. I know there's a question in there about someone that's gone on a 3-day week. So technically then they should go to social welfare and get their, you know, short time in relation to that, and then you apply the subsidy accordingly. But my interpretation is that if you're still paying them the same net wage, you need to reduce the subsidy amount every time. So let's say if they're now getting they can't get more than their net pay effectively. So if you're paying them €200 now, and they're still getting the net pay, well, then the 200 is going to be what you're going to be applying as the additional amount, and the balance will be the subsidy in that particular example.
Okay. So could you run through that one again, John? I'm struggling to I was with you to a certain point. So somebody's on 2/5, so they're working 3 days, they're on unemployment benefit for 2 days.
Well, they could have been on full pay, let's say, for January, February, so their net pay calculation, you know, could be a higher amount.
Okay, that's what I was missing.
So you're based on January, February, but then you're saying now they're on short time, so they'll have still some pay there, but you'll be paying them money as well for their wage potentially. So then you'll reduce the difference is effectively the subsidy, which gets reduced, so they don't get any more than their net pay.
John, I know we're not in the Q&A section, but I'm just thinking of the questions I saw again and again and again. A director with multiple employments, so a director employed in company A, company B, and company C, again, looking at the spirit of the legislation, you would imagine that it's not intended that they can get salary from multiple places, but that is actually how it's written, and the guidance hasn't changed that at all, has it?
No, the legislation is clear. If they're an eligible employee, they're eligible employee. And I suppose the ministers have even alluded to that, and they said it was a quick piece of legislation. You know, there's always going to be loopholes here. You know, these are facts that it can happen, but they would hope people would be honest and fair in relation to it. But, you know, based on the legislation, if they're there in January and February in each of those companies and they're getting paid and they're on the payroll, they're entitled to whatever they're entitled to based on the scheme.
Okay.
So, but then, you know, there's not that many directors you would think that are in 2 or 3 companies getting paid. Usually they're getting paid out of one company, but I know we've had queries that they are happening.
Okay. So do you want to take a run through the updated version of the document, John? Obviously you're not going to go through everything that's in it, but maybe JR, if you could put that up on screen.
Yeah. So, you know, so as we move on to the next page then.
So effectively, folks, what we've done here, so again, watch the version numbers and watch the dates. What we've done here is we took our flow chart that John and Yvonne created last weekend. Then we took the wage calculations they did earlier in the week. And basically what we're trying to build here is one condensed document. And first and foremost for you guys, but second of all, then Michal has created a non-branded version that you can either brand and send out. So back to you, John.
Yeah. So you can see here, like, nothing hugely changed here in this side of the document. As before, you know, various things for employee and self-employed in those cases. So no real changes from that perspective. Nothing has changed. Your employers, as we said, option one, lay them off without pay. Then saying, well, look, they need to go and get their 350 unemployment pandemic instructions. As we were saying before, we're going to keep them on. They're on the payroll. You know, there is that question. Well, look, if I'm if you're going to lay them off, you have to take them off the revenue, you know, kind of the old P45 them. Technically, the revenue don't necessarily say that you have to. They just said the Department of Social Welfare might want it, but I know that the social welfare aren't necessarily checking in relation to this. But a key thing here, I suppose, is that you don't pay them, so you're not doing two subsidies at once. So if we're happy and you meet conditions that they were on the payroll at the 29th of February, they're in January, February, and March, that they meet conditions again with the various risks that we went through, that they have self-declared in relation to it, well then, you know, again, where we've changed here now is, look, as we there on D13, box D13, we've come on, yes, it's before the 20th. So it's just, again, we're making clear it's based on the net weekly average waste, but initially it's going to be paid, you know, it's not going to be based on income. They're going to pay the pay 410, which is in D15 summarized, and that's what we're linking it to. We've just added some calculations for the average net pay there, and when I refer to the average, sorry, John, just when I refer to the average net weekly pay, you can see that we're referring here to examples. So example 1, 2, and 3 for the weekly, monthly, and fortnightly respectively. So that's the examples that follow on from the spreadsheet in relation to that and how we calculate the average net pay. Then D15 just clarifies, it's gone a little bit further into saying you're going to get paid for 410 for each eligible employee, but you're going to probably have to pay back the amount if they're more than the 586 per or less than the 586 in relation to it. And you're only claiming what employees when you do your payroll through the J9 system. Anyone that doesn't go through the J9 system, they're not going to be taken as through the subsidy system. So in D15, we're saying technically, although they're paying 410, the way it's going to be calculated when revenue do their reconciliation, they're going to look at the rules in D18, D19, and D20 here. So D19 then and D20, D18, D19, and D20 here then. In this particular case, we've now just put in calculations, linking them to calculations on a weekly basis, a monthly basis, a fortnightly basis. So A is weekly, 1A is weekly, 2 is monthly, and 3 is fortnightly. And we also have their just in D15, going back to D15 again, you can see at the bottom line there, we reference to example 4 as well, which deals with if you're paying in March, just how it works from a March perspective, because that's a little bit different. So I suppose going through the calculations, I think we've already went through them, so I don't know whether it's talking about the fact that you're putting in a net amount. And this is how you calculate your net weekly average for the purpose of weekly pay. And then the following on the next example, just 2 pages on, it shows how to do it for the monthly one.
So what we've done now, folks, is, as John has described, we've tied in the worked examples. Now, obviously, these come with a significant health warning in that they're worked examples based on the current guidance. They're not done through payroll software. It's basic calculations to demonstrate the issues. And so there's those calculations, but perhaps, John, so they now all tie into the decision tree. And then, Jonathan, there's something else at the bottom there. If you could just go to the very end, to the last few pages.
Yeah, so then we have these are sample minutes, I suppose. As we said, when you're going to the scheme, if it doesn't end up being meeting the 25% test, or what evidence is available to help you prove that you've considered it and you made a decision based on the information available to you. So these are draft minutes, depending on whether it's a single director company or a multi-director company. Again, they're for educational purpose. These are trying to deal with a lot of events, just a lot of events as we go through. As I said, it might be good to date stamp them if you had a directors meeting virtually. We have it as if it's virtually happening, that you email them and say these are the records of the minutes in relation to that. So you can see, you can go through the next page there, Jonathan. It's going through, well, look, what's the reason for the business here? It's going through the fact that we need to meet. There's a big issue with this government pandemic. You're thinking about, are we going to go into the subsidy scheme, or documenting, well, look, what is the subsidy scheme? The chairperson explained what it was, how it worked, explain the fact that you encourage to top up. So if you follow on to the next page, Jonathan. So again, depending on the situation, the key assumption is 25% reduction. We're just referring, again, I haven't put them here, but obviously I'm referring here to an A and B there in the second paragraph. The government concessions, because that's a key thing for some people that's going into this legislation. They're relying on a concession, so make sure that you have those attached to the minutes, put into the minimum book in relation to it. So I've attached A and B, being the FAQ one, and also the clearance, the guidance document on the scheme itself relating to the 25% test. just if you are in it, I suppose there in the paragraph that just at the top of your screens now, that's just referring to the fact if you have cash reserves, it's dealing with the fact that, well, look, revenue given this concession, we've looked at this, and based on that concession, we're happy we're going to do that because we need it for future capital investment, or our borrowings exceed the cash that's in the business. If we're a startup, obviously the red would come out, wouldn't be applicable, but if you're a startup, you might be dealing with those. So effectively, that's kind of clarifying. Then a detailed discussion was then had at the bottom of that screen there. Just back up a little bit. Effectively just talking about, well, look, either your business is closed at this point, depending. So I suppose you have your minutes will be documented based on when you made a decision. Did you go in before the business closed, or did you go in afterwards? Obviously, it's a point in time. So we're saying it's closed. So based on that alone, we would given that it's closed, that in itself, and we don't know when it's going to open, that in itself is giving us a worry that we're probably going to meet 25% reduction. If you go on to the next page, then Jonathan, this is a situation where maybe you hadn't closed, but you think you're going to close, and the fact is a recession coming down the line, consumer spending afterwards is going to be significantly tight. So that's where we're coming, that we think the 25% reduction is going to happen. Then there's more, I suppose, substantive, and it has to be, obviously these are all for as appropriate. So just some of them, like you're showing, well, look, you're looking at a report from March versus February. So if you had any sort of documentation that you attach that to the minutes and say, well, this is February, March has been down significantly, so that there is an indication that we're going to be there for Q2 will be similar. Likewise, if you had the information suggesting that there's a decrease in Q2 looking at the Q2 29 and saying, Jesus, based on Q1 2020, we're not going to get there. Again, it's back up in relation to that. Also, maybe if you're not a huge business, that you have a sales pipeline, you say you have a list, well, this is all the work we have, or we don't have any work, well, then at least that's there to back it up, and you're appending that to the minutes of the meeting, so it's on the record. And if you have more sophistication towards the end of that, you're talking about budget or forecasts. A lot of small, medium enterprises won't have that, but if you do have them, at least that's what we thought we were going to do. And looking at it now, we're not going to do it, so we're going to have a 25% reduction in relation to it. And so if we move up to the next page. So then once we've done that, we're said, look, based on the aforementioned factors, we felt that it was likely, based on all the evidence that was available, that 25% reduction was going to be there. Now we're going to talk about, well, the inability to pay. Well, we're looking at our latest set of management accounts, if we have them, saying, well, look, there's bank overdraft, or there's only this much in cash, or this much in debtors and creditors. Or if you're not sophisticated like that, or you don't have the resources, well, then your bank statement, what your loan account balance, what your cash in bank, and all your bank accounts in relation to it. If you are in a cash surplus position, again, you're relying on a concession source, again, documenting that basis, whether you need them for borrowings, or you don't have borrowings, but based on revenue concession, you think you'll meet 25%. That's why you're going in. Debtors is, talking about debtors, you find it difficult to clear. Direct debits being cancelled in relation to it. So again, this is creating issues for everyone. Then I suppose the last point there is just getting a schedule, and no matter what business you're in, you're able to identify, well, what is my monthly cost? And look, here's my monthly cost. This is what my revenue I think it will be. Obviously, there's a deficit here, and here's just a schedule of what we wrote down as part of this when our meeting. I suppose this is done as a minute as meeting. It could be just done as a memo for a business that isn't a company as well in relation to it. So based on those factors, I felt that it would be significant economic disruption as a result of the COVID-19 legislation. So on that basis, you can see in the next page that we're saying it's actually in the best interest here of the company to actually enter into this game. And towards the top of that page, I'm just saying, well, look, we know there's issues here. What are we doing? We're trying to reduce our costs, trying to prolong credit payments to debtors, not doing our planned expenditure, showing all from point of view of company law that you're trying to do as much as possible to make sure that the company's existence, and you're doing everything for the benefit of the company. And based on this, you feel that it's in the best interest of the company so that they're able to come out of this time in a stronger position where they've got a subsidy and they have the staff still on their books, so that they have their key individuals or the employees there ready to go when things turn around. So, obviously the other minute is the same, only for it's a sole director company. So hopefully they will be useful, but it's all about adjusting them to your particular needs or adding as appropriate.
Excellent, John. I'll be honest with you folks. John did send me these documents for review this morning, but with the data was in it, I haven't reviewed them. John, they're seriously impressive. It looks like those documents and those minutes are something that any company who's making decisions here, that if this doesn't give them an almost template to follow, it definitely gives them a really strong framework and excellent ideas. So that's excellent. Thank you.
Yeah, hopefully now it'll be useful. Yeah.
John, we said we were going to do a 5 at 5 and we're going to get off in 30 minutes. Do you have any final wisdom to impart before we go?
No, I like, for me, I still think the net pay, as I said, is not regrossing, but it'd be welcome an example from revenue. Hopefully they'll get something to us early Monday. I don't imagine, you wouldn't know in the weekend, but it'll be early Monday. It's the usual.
Okay, folks, that's going to wrap up our session. We'll be back here. We'll be back here on Monday. We'll be back on Monday again with more updates, more material, and to help and support you in any way we can. From my perspective, we're now facing into an economic reality that is different from Friday of last week. It seems like an ion ago since I came on one Thursday afternoon with the first version of, well, what do accountants need to do with coronavirus? The situation has fundamentally changed and it is deepening every day. And you can see that based on the government commentary. But just remember this. At the end of this, there are going to be businesses. There's always going to be businesses. There's always going to be accountants. And when we look back at the last recession, there was no accountant that was on our client list before the recession that was gone afterwards because of the recession. I appreciate the pressure you're under. I appreciate everything that's happening. But for those accountants who are thinking a little bit differently and doing a little bit differently, I'm not going to pretend there's a world of opportunity out there, but some accountancy firms are going to come out exponentially better than others. And it's challenging right now. And we're going to get somebody on next week, and we have somebody lined up from America that's going to come on and talk about the stress, and not just your stress, but dealing with the stress of your customers. So my closing comment to you this evening is, take the weekend, rest, recover, and we'll come back again on Monday and do it again next week. But that right now we all have families at home, and we all have people who we care about. So to put the focus on yourself, put the focus on them, and when we come back Monday, we'll do it all over again, because we're in this together. And you're in it together with your customers and clients. We're in it together with you. So John, thank you very much. And just to acknowledge the work that you and your team have done this week, John, is nothing short of remarkable. So thank you very much, folks. Thank you very much. Have a good weekend. Stay safe, and let's get this done.